We just have a quick question here from Sakim asking for some clarity on the type of entries that he can consider when looking at potential trade ideas in the terminal. So thanks for the question, Sakim. Now, when looking at the trade ideas in the terminal, there's obviously two types of ideas in the terminal. You get the first group will be our in-house analyst trade ideas, and the second one will be investment bank trade ideas. Now, the first thing that you want to do always with these trade ideas is to understand the rationale, the reason for why the analyst is looking for this particular trade. Whether that's an investment bank analyst or a forex source analyst, always understand the rationale as well as the potential trade risks for that trade. So our idea with these trade ideas isn't to act as a trade idea terminal or a signal server, so to speak. Our methodology or rationale behind these ideas is to try and give you insights into how to use the fundamentals, the sentiment, as well as technicals to come up with actionable trade ideas. And obviously to show you how to do that, will hopefully teach you the methodology on how you can go out and find your own trade ideas and your own rationale, and looking at these ideas. And with that in mind, just because we have this as an idea, these ideas won't always play out, and you might not always agree with the rationale and the trade risks. And that isn't a bad thing. That's a good thing, because it shows that you're obviously you thinking and analyzing for yourself. So you're not taking it at face value. You're reading through it, making sure you understand the rationale. And sometimes you'll read and say, you know what, you're taking the other side of that coin, and that is absolutely fine. That's actually great. That's what you want, because you're starting to analyze the markets for yourself. So obviously, after that little bit of a rant, let's go through an example of the CAD yen for Friday, right? So let's say you have read through this, you've gone through the rationale, you've gone through the trade risks, you've gone through the technicals, looking at the entry, the target, the stop, and you say to yourself, okay, I agree with this rationale, I like this trade idea, I like the timing, I'm going to consider it. So let's say you've done all of that. Let's go to the CAD yen. So with this particular trade idea, we're looking for a potential entry at the 78.50. We're looking for a stop at the 77.90. Now that should be somewhere over there. And of course, we're looking for a potential profit target to come in at the just below those highs at the 81.50. Now, let's say again, you agree with the rationale, you're looking at this and you're looking for an entry. What type of entries can you consider? Now, there's basically two things you can do. The first one is just taking an arbitrary entry, either at market or with a limit order at 78.50. Now, the great thing about doing that is you normally get you enter the market more frequently, meaning you often don't miss out on trades because you can get in at that level. The cons about getting in at that level is you often go through a little bit of extended, not always, but sometimes going through drawdown, because the market, even though you've done your analysis, you're looking at that 78.50 saying that, okay, this should be a solid level of support. The market doesn't always act as support at these levels, right? It can just slice through that level like there's no support. And then, of course, you're sitting with some drawdown. The other drawback on entering arbitrarily at 78.50 with a limit order or at market is that obviously you're waiting for the market to pull back to support, or if it's a sell, you're waiting for the market to pull back to resistance. Now, the reason why the market is pulling back in the first place is an important consideration. So if the short-term sentiment pushing against that overall trade idea is strong enough, you might see that support fold, and you might see the market taking you out of that trade. Only later, once the short-term sentiment has died down and reached other levels of support, you might see the pair bounce and move to the upside if the rationale is obviously correct. So there is a lot of downside by just entering at 78.50. Now, the other thing that you can do is you can look for a technical confirmation for that particular level before you take your entry. So there's a couple of ways to do that. We actually had a great example of a false break with this previous move to the downside. So we had that 78.50 marked up. We saw the market break through that 78.50 level, obviously reaching this next overall support area or a support resistance zone, or just close to it. We saw it have that false break, then it broke back above the 78.50, came back to retest, and then bounce from that level. So that is a classic false break re-entry that you can consider. So apart from entering at 78.50, you can wait for a possible break break back above a retest and then an entry. Because the market, remember, doesn't look at 7850 as a cemented line. It looks at it as a zone, right? So you can see a false break retest and then a re-entry. So that normally shows that the level is more important. So you can wait for that particular entry. Or if you look at the CAD yen specifically, we have this trend line coming down. Now that's not always going to be the case. Not every trader day will look like this. But just as an example, apart from waiting for a false break, you could wait for a potential break of the trend line and a retest and then a re-entry. So the pros about waiting for a technical confirmation is that you normally get you get that added confirmation. So you're not just looking for the fundamentals to play out. You're also waiting for the technical side of the market to show you that that the level that you have highlighted is significant enough to enter the market. The cons about entering this way is that you might miss the move. So even though sometimes you get that classic false break and re-entry, or that trend break and re-entry, sometimes the market has something else in mind and just doesn't pull back at all. And this move to the upside is a good example. So there was very few opportunities to get back in this move after it broke through that 7850, right? So the cons with waiting for that confirmation is that you might not get the entry at all. And whichever one you go for, whether you wait for the confirmation or whether you enter at that level, it really comes down to the type of trader you are. If you're the type of trader that wants to wait for that confirmation and be okay with missing the trade if it moves without you getting that re-entry, that's fine, go for that. If you're the type of trader that doesn't mind that initial drawdown before it goes in your direction, obviously, you should get into more trades that way. But there's obviously pros and cons with both approaches. So I hope that helps, Akeem. As always, if there's any other questions, don't hesitate to let us know.